I'm looking at AT&T today. It's trading about $27.50 and it's a stock that I would happily own. It's an established company, pays a dividend, and at current prices, it seems reasonable. But if I'm going to buy it, I want to get paid first. It's easy to see a dividend stock we like and just buy it. And in crypto, we call that aping in. And the thing is, the moment we do that, we're then exposed to any downside movement in the stock price. So for me, that doesn't really make sense. I want to have a more structured entry and actually get paid to buy the stock. So in today's video, what I'm going to be doing is using a cash secured put with a strike price $1 below the current trading price of the stock, so that I get paid a premium today, and then if I do end up buying the stock when the option expires, I'll have a cheaper entry than today's price. Let's have a look at the options chain so that things maybe make a bit more sense. I am using Tasty Trade for my trade today. I like to buy options around about 30 days to expiry. Now, that's not necessarily the right thing to do, that's just the way I like to do it. So I'm looking at this March 27th expiry, which is 29 days out. So looking at the chain here, we can see the current trading price is round about 27.50, so it's up here. And I am looking for a delta of round about 0.3. And the higher the delta, the more aggressive my entry is going to be. So I could go for this $27 strike price, but to be honest with you, I prefer this $26.50 strike price. And that means the premium I would get today is going to be 30 cents per share, and an options contract is for 100 shares. So that would be $30 paid to me today for committing to buy AT&T stock at $26.50. And depending on the stock price at expiry, or as we move towards expiry, that will determine whether or not I end up having to buy these shares. And as I was saying at the start, owning AT&T is what I want to be doing anyway. But what I'm really just trying to do is get a discount on today's price. So not only would I be paying $26.50 per share, because I'm getting this premium today, the effective buy price, if I do end up getting assigned these shares, wouldn't be $26.50. It would be $26.50 minus 30 cents. So that would be $26.20 would be my effective buy price. So I'm going to just put this trade on. What I want to do is I'm selling a cash secure put. So I just click here, and then we can see down here that the limit, it's a limit order I'm setting up just now. The limit price is 30 cents. What I'm actually going to do is change this. It's saying the mid price is 32. Now, this limit order might not even go through, but I'm going to select a 32 cent price for my limit order, and we can see on the next screen what that means. In fact, we can see it up here. The max profit, or the premium that I would get for this 100 share contract, would be, instead of 30 cents, or sorry, $30 like I was just talking about, it would actually be $32. So not a huge difference, but a difference all the same. And all I need to do next is click this review and send button. Now, as I was saying in my previous video, I am living in Bangkok just now. It's lunchtime in Bangkok, so the American markets aren't actually open, but that's fine. I can put this limit order on, and then when the US markets open, it may or may not go through, and I'll be able to check when I get up tomorrow morning. So this is saying that the buying power on my account is almost $3,000. The limit price that I'm setting is 32. Tells me a little bit of commission and the fees. So I'm going to walk away with a profit, or not a profit. I'm still going to walk away with a payment if this options contract goes through for over $30. And opening this position, because I have to commit or have to have the money on hand to be able to buy these shares if I'm assigned, the buying power on my account is going to get reduced by this amount here, which is essentially 2,650 minus the premium that I'm collecting. So I do have enough buying power to be able to open this contract, and I'm just going to click submit. And up here, this shows us that this is one pending contract. This delta value of 0.27 is a rough expression of probability that I will have to buy this AT&T stock. So just over a quarter of the time, if I were to put this limit order on, I would end up with the stock. And that's totally fine. As I was saying at the start, I do want to own AT&T stock. I just want to get a slightly cheaper entry, and being paid to get a cheaper entry is perfect. And that's why I've decided to write this option. Now, there's different things I could be doing with delta. Looking at some of the lower delta options, we can see that if I went down to a 0.1 delta, the premium that I would get would just be $7. And the chance of me buying these stocks at a $25 strike price would be just a 1 in 10. So I want to be a little bit more aggressive than that, but not super aggressive. For example, like a strike price above today's trading price would get me a $93 premium. But then the chance or the likelihood that I would buy these stocks at this price would be higher. And the way I like to write options is using a lower strike price than the current price. There are risks to writing options, and the main risk for this cash secured put that I've just written is that the stock price falls dramatically. And that would mean that even though the stock price is down below my strike price of $26.50, I would still have to pay $26.50 per share for 100 shares to buy these AT&T stocks. So that's why it's vital for me that I'm only writing options for companies that I want to own anyway. I'm not trying to predict where AT&T is going to go over the next month. It's a stock that I want to own anyway. I'm really just trying to structure my entry. So either I get the stock at a lower price than it's at today, or I just collect a premium and get paid to wait. It turns out my order at 32 cents didn't fill. The market opened strong and AT&T moved higher, which meant the premium on the $26.50 put actually fell. But that's okay. The market didn't give me the price I was looking for, and I didn't force the trade. So I'm really just trying to stick to my structure rather than aping into positions. And there's always going to be another opportunity. And I really want to stick to my rule that I get paid first.